Ladies and gentlemen, good day and welcome to Sharda Motor Industries Limited Q3 FY22 earnings conference call hosted by PhillipCapital India Private Limited. This conference call may contain forward-looking statements about the company which are based on beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Apurva Shah from PhillipCapital India Private Limited. Thank you and over to you, sir.
Yes, thank you, Lizanne. On behalf of PhillipCapital India Private Limited, I welcome all of Q3 FY22 post-earnings conference call of Sharda Motors Industries Limited. We have with us today Mr. Asim Rilan, Chief Executive Officer, and Mr. Srinivasan N, Chief Financial Officer of the company. I would request the management for the opening remarks, post that which we will open the floor for Q&A. Thank you very much and over to you, sir.
Thank you, Apurva. This is Srinivasan. Thank you and good evening to all of you. A very warm welcome to everyone present on this call, and I hope you all are keeping safe. On this call, I have Mr. Asim Rilan, our Chief Executive Officer, and we have our Investor Relations Agency, Strategic Growth Advisors. I'm hoping you have all received our investor presentation by now. Those who haven't seen them yet, they can do so on the stock exchange or on the company's website. Let me begin with the industry's highlights for the period. In spite of the pandemic affecting yet another fiscal year, there is growing optimism about the country's economic recovery. The auto industry has suffered as a result of pandemic and the semiconductor shortage, but it is now resuming its long-term growth trajectory. Demand is very strong, which can also be evidenced with a backlog of almost 700,000 cars to be delivered end of December 2021. In terms of auto industry performance during Q3 FY22, we saw sales of 7.9 lakh units in passenger vehicles, 3 lakh units of commercial vehicles, 1.9 lakh units in three-wheeler sales and 40.1 lakh units in two-wheeler sales. However, Q3 FY22 sales, including those of the festive season, actually fell short of expectations. When compared to Q3 of previous 2 years, the HCVs have shown positive growth, whereas sales of passenger vehicles and two-wheelers have been subdued. We are expecting the CV segment to continue to grow and show a good double-digit growth. Evolution of new emission norms in the form of CEV 4.5 and TREM 4.5 will open up new opportunities for us, and we are prepared with the capacities and technologies to address such a market. With the government implementing various PLI schemes for auto and auto components, advanced chemistry cells, and the recently announced semiconductor manufacturing scheme, the government support to the industry is pretty much evident. The transition from fossil fuels to electric mobility is underway in two-wheelers and three-wheelers currently. The government's proposal to implement a battery swapping policy for EVs with interoperability standards will benefit the electric two-wheeler and three-wheeler segments. Now coming to the business performance, our Q3 FY22 revenue was marginally lower by 1% versus Q3 FY21 with the semiconductor shortage affecting the demand. However, our revenue for the 9 months FY22 grew by a solid 45% to INR 1,637 crores against 1,132 crores in the previous year's 9 months. Further, on a sequential basis compared to Q2 FY22, our revenue was marginally lower by 1.5%. Our EBITDA, including other income, stood at INR 68 crores in Q3 FY22 as against 57 crores in Q3 FY21, a growth of 19%. Further, EBITDA margins including other income were 11.7% in this quarter as compared to 9.7% in the Q3 of FY21. And on 9-month basis, our EBITDA was 185.4 crores as against 92.7 crores of FY21 9 months, a growth of almost 100%. EBITDA margins, including other income, was at 11.3% in 9 months FY22 as compared to 8.2% in the 9 months FY21. Our PBT margins rose to 9.9% in Q3 FY22 as against 7.6% in Q3 FY21. During the quarter, the share of loss of JV and associates was INR 3.7 crore versus loss of 2.5 crore in the Q3 of FY21, whereas for the 9-month FY22, there was a loss of INR 10 crores versus loss of INR 5 crore in 9-month FY21. This was due to the severe impact on CV volumes during the year. Our consolidated profit after tax, including the JV profit or loss, for Q3 FY22 was INR 39 crores as compared to 31 crores of Q3 FY21. And similarly, for the 9 months FY22, it stood at 105 crores against rupees 41 crores in the 9-month FY21. Further, we continue to remain debt-free with about 346 crores of surplus cash as on 31st December 2021. With this, I would like to open the floor for questions. Thank you so much.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Vishal Srivastava from Swan Investments. Please go ahead.
Thank you for taking my question, sir, and congratulations for great set of numbers despite of challenging scenario. Sir, my question is regarding what was the contribution, what was your value-added contribution for the to the revenue for this quarter, and same thing during the quarter last year and Q2 FY22.
Sure. So I'll take this question. This is Ashim, and wish you all a very good evening, and thank you so much, Vishal. While on the value-added side, right now we do not disclose value-added sales only due to our customer confidentiality agreements regarding catalyst pricing, but we are working on these disclosures and working along with our customers on value-added sale disclosures. And as and when we get these confirmations, we will move to that set of value-added sales.
Okay, sir. Okay. Sir, can I get a ballpark proportion, 40%, 45%? We can say that.
Just to avoid any, guesstimates, as and when we get the confirmations, we will, do that. We totally understand that this is something which will really improve the transparency, and we are working on it very closely with the customers where we currently have confidentiality agreements. So respecting those agreements at this point, I would not comment any further.
Thank you, sir. Sir, my second question is regarding
Sorry to interrupt, Mr. Vishal, your audio is not clear. We're not able to hear you clearly.
Okay. Is it clear now?
Much better. Thank you.
Thank you. Apologies for the same. So my second question is regarding the capex requirement for the year FY22 and going forward in FY23.
Sure. I will maybe Srini-san, you can take the question.
Yeah. So as we had also informed in the previous calls, our capex requirements are only incremental in nature, because we already have the major facilities, ready. So this year we are close to around 20 crore capex, and maybe another 10, 15, 20% more may be the requirement. But We have provisioned further 10 crores, and it depends upon the actual projects and the incremental capex required during the year. For the subsequent years, again, it depends upon the new projects that we are looking for, and may be difficult to estimate at this stage.
Okay. Okay, sir. So my last question is regarding, any growth target you have in your mind for next 2 to 3 year period, and the margin target you have in your mind in next 2 to 3 year period. And some, any color you can throw on the few new order wins in the current quarter as well as in last 1 year.
Sure. So while we are not giving any specific guidance in terms of, sales targets, growth targets, but we remain to be very bullish on the next 2, 3, 4 years. And we are confident to be outperforming the automobile industry by a good number. When it comes to order book, right now we don't have disclosures on order book, but we are also working with our business development team to provide some kind of disclosure on order book. But just as of now, we don't disclose order book. But in a general statement, it is looking very strong, and it is definitely one of our best performances by our business development team in the history of the company.
Thank you so much, sir. I appreciate it. That was all from my side. I will fall back in the queue. Thank you.
Thank you so much, Vishal. Thank you so much, Vishal.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Abhishek Tandon from Bowhead, India. Please go ahead.
Hello, sir. Thank you for the opportunity. So my first question is regarding our JV with Kinetic Green. So it was supposed to be operational by Q3 FY22. So what is the status there?
Yeah, so it is meant to be operational of Q3 of the next financial year. And as of now, it looks to be on track. What we are doing is we are making adjustments based on new battery swapping policies, etc. And we are hopeful to maintain that timeline.
Okay. Just that I read the notification, it said 22.
Okay.
So, are we looking into the PLI scheme?
Yeah, so we are looking into the PLI scheme, and maybe Srini-san, you can give an update on that.
Yeah, sure. So we definitely are looking at the PLI scheme. We have got some of our products, included in that notification, and we have also applied for this scheme through the required documentation and everything. And we are awaiting now government's screening and approval process, which may take another couple of months, and post that we can comment better on this.
Okay. Thank you, sir. So just one more question. So, what was our percentage contribution to our sales of the construction equipment, the product that we supply to construction equipment?
Sure. So I will take that question. As of now, we are not supplying to construction equipment because construction equipment does not require our product. But as the legislations on CEV as well as TREM are coming in between 2022 and 24, the entire construction equipment market would also require our product. And we are right now in touch with almost all construction equipment makers for future business development.
Okay, so the move from CEV3 to CEV4, which happened for some construction equipment from April 2021, and that period is stopped by September 21. So that didn't require any supply from our side?
Yeah, very marginal part right now for construction equipment that requires our part, and most of that is being imported at this point of time because the volumes are so low that it does not make sense to localize it. But as the market expands, the localization efforts are on. And once the customers are localizing, we are talking to them as partners to do the same for them.
Okay. So, but when TREM 4 comes in next, this April 22, will that lead to any incremental sales for us?
Yeah, that will be leading to incremental sales, just because the tractor market or the off-highway market will not be fully emissionized by these norms, but yeah, the per section that would lead to some incremental sales for us, and we do have good order booking there, but it would be relatively smaller than the TREM 5 which is coming. The big impact will be seen actually in TREM 5, but TREM 4 will definitely have some additional business.
Okay, so thank you so much. That was it from me.
Thank you so much, Abhishek.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Viraj from Securities Investment Management. Please go ahead. Viraj, your line is on the talk mode. Please go ahead.
Hello, can you hear me?
Yes, sir. You're loud and clear.
Yeah, hi. Congratulations and for good set of numbers. Just have broadly 2 questions. First is, you said that you applied for another PLI for products. So are these existing products which you have applied for PLI, or you're talking about new product categories?
No, so I'll take that question. This is related to the products we are already supplying. I only meant by the notification there are certain products that are covered. So we are supplying more than that, but we have applied for the PLI considering the existing product portfolio only.
That will largely be in the exhaust system.
Yes.
Right?
Yes.
Okay, got it. And second question is, if you look at our sales run rate in this particular quarter also, it's a quarter where most of our major customers had some production challenges in terms of the semiconductor, but still our performance has been quite healthy. So this outperformance what is driving this? Is there any other new customer addition or any new model wins which is kind of driving this? Anything you can share on that?
Yeah, so I will take this question. So yeah, in general, that our market share in some customers has improved. That has had a little bit of help in this. Plus, as our products are stabilizing, it is giving us tailwind. So that's why there has been an improvement in our numbers versus the industry.
Okay. But okay, got it. So on the cash part, this is the last one question. The cash balance just keeps on building up. So is there any thought around, how we want to utilize it? Because we have ample opportunities through PLI and, just want to get a perspective. Is there any firm plans around it?
Sure. So yeah, so one, that we are very conscious of the cash on our books, and as we expect good free cash flows in the coming years, we do have a very good opportunity to utilize this cash. So one, we are exploring various M&A opportunities, and as and when they materialize, we will update on the same. And second, we have released a new dividend policy, so there could be some utilization through that as well.
Okay, fine. That's all from my side. Good luck.
Thank you. Thank you so much. Thank you.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Karthikeyan from Suryash Advisors. Please go ahead.
Yeah, hi, good evening to both of you. Multiple questions. One is, what is the current confidence in TREM 4 being implemented? Your perspective on that, please.
Sure. So I will take that question. One, that TREM 4 will be implemented. We are quite confident of that. The OEMs have got their products ready. Everything is ready. Now, some marginal delays could be there, but implementation will be there for TREM 4.
Thank you.
In our perspective.
And TREM 5, is there any rethink on that, or do you believe that that will also happen plus minus along the indicated timeline?
Yeah, so there is always, room for slight changes because, till it is not fully notified. But yes, we are confident the way the customers are working on the product development quite aggressively. And there also a lot of good work has already happened. We do see that TREM 5 will be implemented. Now, timeline, there could always be marginal delays.
Interesting. Second thing, more question related to current momentum in business. So can you give us some index-based sense of what production schedules have been indicated? Assuming 3Q was X, where would 4Q be? I mean, I just need a rough sense at least. And also, can you reference 3Q to say 2Q and 1Q? So we'll have a flavor of what numbers you're doing because these numbers don't, the blended numbers don't tell us anything.
So, I mean, if you can just repeat your question because it's slightly muffled, I couldn't understand. If you can just repeat it, please.
So what I'm trying to understand from you is the kind of traction we are seeing in terms of your standalone volumes versus value. So if you could give us a flavor of what would 1Q, 2Q, 3Q, and 4Q would be like. 4Q is, of course, an outlook thing. So if you had to index 4Q to say 1, 2, and 3, that will be a helpful indication of how things are evolving.
Okay. So
because the broad sense is that 4Q is generally weak and there may be some amount of pipeline inventory. So I'm therefore also giving you a context.
Okay. So we don't have any index as such offhand, but we will try to revert back on that for you and share that with everyone. But just regarding business, we are looking at some challenges here and there which the OEMs are facing with semiconductors, but it is definitely on an improving trend. And generally, now that the Omicron wave is also subsiding, it generally looks good on the standalone side. But it is anyone's guess as we are going into a dynamic environment, especially with the semiconductors and these waves of coronavirus that come in. But yeah, it's generally looking good. And as of now, it is looking strong. And we'll work on some kind of an index maybe to share it. I don't have it offhand right now.
Sure. Appreciate that input. The third one is on the Kinetic Green, the joint venture partner. He has tied up with IMA. Right. So would there be any fallout of this with you, either positively or negatively? Would you have a role to play there also?
Yeah. So without commenting on anything specific to Kinetic Green and their partnership, in general, we were very happy with this news as their partnerships have definitely enhanced their position and also make a good play for them in not just the three-wheeler EV market, but also the two-wheeler EV market. And any volume benefit or any growth benefit that our partner, OEM anchor partner gets, we would also be benefactors of that. But as this announcement is fairly recent, I won't comment any further apart from saying that definitely it is good news and we are excited and we wish Kinetic Green the best on this venture.
Great. Last question is on the subsidiary. You had also started supplying to Ashok Leyland, so one would have thought that there would have been some gains from operating leverage over there to offset the additional costs from the new line. So you reported similar losses to the previous quarter. So some perspective on the subsidiary performance would be interesting for the joint venture, if you like it as a starter.
Sure. So, there, without again naming the customer, but yes, we did, start with an additional customer. But there are larger challenges that the customers are facing in couple of engines in the CV market when it comes to semiconductors. And those challenges are, getting resolved slower than what we are seeing, more in the other markets. In general, if you see that the sales have also been lower or equal, as soon as the sales pick up, we would see a very good rebound in that venture as well. And it is just that the engines that are linked to our products are facing the semiconductor issues quite largely as of now. But of course, that also creates pent-up demand, and whenever this resolves, it would be a good bounce back.
Okay. Thank you very much for answering my question, and best wishes.
Thank you so much. Thank you.
Thank you. The next question is from the line of Sonal Kohli from Bowhead. Please go ahead.
Thank you, Asim, and congratulations on another good quarter despite the challenges. I had broadly two queries. Is it possible for you to give in context, of what will be the impact of, TREM 4 in terms of, either revenues or profitability? A broad context, not exact numbers, is what we are looking at, assuming a stable market similar to, FY22 or whatever is possible for you to, give. That is one. The second part is, these regulations regarding CVs, which are expected to change. These are also RDE regulations, and on CV side, while you have talked about cars that the impact would be 10 to 15% in content per vehicle, what would be the impact on the CV side?
Sure. So the first side of it regarding TREM 4, in the case of TREM 4, that just because volumes on a relative scale to our business, there will definitely be addition, but nothing that, would be like a big bang, which we expect from TREM 5. So there would be some improvement, and definitely that does help incrementally in terms of sales and performance. In terms of margins, we expect the margins to be similar to other industries. The similar margins we have in our standalone business, we also expect in TREM 4 products. Maybe there's an opportunity to be slightly better in the case of TREM 5. And definitely TREM 5 is when we will see a very good impact and a very good tailwind for the company when it comes to sales profitability. And that is on the TREM or the tractor business side. Now coming to CV. So CV on our product in terms of value added sales, this new regulation will not have any significant change on the content vehicle, but it does, kind of instill the OEMs to recalibrate their engines. They have to be let's say commissioned and, basically sent to ARI, etc. So it's basically another development activity that takes place, and that creates an opening for us to gain market share. Otherwise, these products are very sticky because they require a lot of testing, and it becomes tough to take any market share. So it will be more like an opening to gain market share on the CV side when we talk about the RDE regulations that are implemented April 2020.
So they are also in April 2023 as far as the CVs are concerned.
Yeah. On-road is all together in April 2023.
In terms of profitability, either on the passenger car side or the CV side, would these lead to increase? So while the content may go up 10 to 15%, would the EBITDA increase be on those lines, lesser lines, or higher lines?
It would probably be on the same or a little bit better because generally as the product is becoming more technology intensive, the profitability does, go up. But let's say it would be slightly better. And also just to clarify on the CV side, that when I'm talking about content, I'm talking about the heavy commercial vehicles, the MHCV segment. But when we talk about LCV segment, the LC segment will have an increase in content per car or content per truck to about similar to PV or even slightly better than PV.
So Asim, just for the sake of clarity, if I understood you correctly, what you are saying is your content per vehicle in LCVs and passengers will go up by broadly 10 to 15%, and therefore at a very broad level, the EBITDA from these would also go up by 10-15% per vehicle. Have I got it right?
Yes.
Great. As far as the TREM 4 is concerned, would you say, including the cranes and the CVs, the impact for you would be less than 5% at the overall level? Or could it be even more than that?
Tough to put a number on it right now because there are a few variables in play. So I can't put a number on it, but yeah, it will be incremental, what I can say at this juncture. And as we, probably get to know further, I will be able to comment a little bit more in detail regarding that.
As far as your MHCV business is concerned, post the regulations change, is there any timeline where you think that you may be able to make similar kind of profitability, in terms of margins at least on a value-added sales, similar to what you make currently in your standalone entity? So what kind of market share would you need to go over there, and do you think that's a possibility over a 5-year period?
Yeah, so definitely it's a possibility to reach similar margins. As the business is designed, it is by design a very similar profitability business. It's just not reached its full potential of sales, even with the existing orders that we have due to various issues by the pandemic and now the semiconductor shortage. But yes, definitely as the sales increase, we will start seeing improvements, and we would definitely come to an EBITDA which is similar at full potential sales, even as we move forward in the next 5 years.
In terms of competitive intensity, is the CV market similar to car at a broad level, or very different? And what would you expect on the tractor side?
Yeah, so I would say the tractor and CV market, and this also includes LCV, the competitor intensity is slightly lower. Reason for that is that the technology requirement is much more. So we expect a lesser competitor intensity in these segments, and PV is just slightly more, because there might be 1 or 2 more competitors in PV due to some Japanese joint ventures, etc. But largely it's a 3-player market, the way on the emission side.
My last question, Asim, I just wanted to understand. So if I remember correctly, and I may be at broad level correct, but may not be giving the exact numbers. I think ex-Maruti, which you don't cater to, there's a decline Q&Q of roughly 12% in terms of sales volumes of passenger cars. When do you think the industry ex-Maruti would go back to the Q2 number, from where it has declined? Would you expect that to be Q4, Q1? When do you see the issues getting solved at a broad level?
At a broad level, that it is definitely the worst seems to be behind us when it comes to the semi shortage. And as Srini-san said, that there is a very good order backlog which all customers are seeing. So this more looks to be like a supply side issue rather than a demand side issue. So we are confident as we move through the quarters, our customers' performance will be improving as well.
And you would expect the same in MHCV as well, in addition to the passenger cars?
Yes, we would, but now the MHCV segment just has fewer engines, right? So if there is one impact on one engine, that does have a higher proportional impact on sales, right? So it is a bit harder to predict MHCV. It's easier to predict, the LCV, PASCA, the smaller engine market.
Thank you so much, Asim, and congratulations once again. Thanks.
Thank you so much, Sonal. Thank you so much.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Aditya from Robo Capital. Please go ahead.
Good evening, sir. So this question is regarding our Eberspacher joint venture. It was supposed to come to break-even soon. So do we have any updates on this?
Sure. So yeah, we were expecting that the sales would reach break-even points this year, and especially in this quarter, next quarter. But due to the semiconductor issue that our customers are having, it has not yet reached its full potential of sales, and sales look to be very similar to last year numbers. So as soon as the customer sales pick up on these engines, we do expect it to improve and reach break-even point. So we are very hopeful that in the quarter or the coming quarters, there should be improvement, but it's contingent to this semiconductor issue being resolved.
Okay, sir, I get that. And do we have any updates on the capacity utilization?
Yeah. So, very broadly, maybe Srini-san can answer that.
Yeah. So in terms of the ABUS Packer JV, we are currently at 40 to 50% capacity utilization as we.
And on a blended basis?
Yeah. So Srini-san, by blended basis, you mean that standalone and just if you by blended, you mean standalone plus joint venture?
Yes.
No, this.
Okay, please go ahead, Srini-san. Yeah. Srini-san, you can go ahead. Yeah.
Yeah, on the standalone entity, we are already running at 85% to 90% capacity, 85% capacity utilization, whereas in the joint venture it's around 40 to 50%. Hope it is clear.
Yes, sir. Okay. Thank you. Noted.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Sriram Rajan, an investor. Please go ahead.
Thank you. Am I audible?
Yes, sir.
Okay. Thank you. My name is Sriram. I'm an individual investor. Just 2 questions. Congratulations on a great quarter. As we see the shift happening to electric vehicles, as a management, do you see that the exhaust line of business could see some deceleration a few years from now? And if yes, do we have plans to bridge that gap? That's question 1.
Sure. So I will take that question, Sriram. So in general, as we look at the electrification journey, we are seeing that there will be a large impact on the 2-wheeler, 3-wheeler and the bus segment, and that would, electrify fairly fast. When we look at the PV segment, we would be entering more into powertrain scenario, which would have multiple powertrains. And when we look at the CV and the tractor and off-highway segment, we are fairly comfortable that this will not electrify soon at all, at least for the next 10 years, and it would remain to be very stable. Now, just looking at our own strategy, our company is going through an exponential increase in its addressable market as a result of not just legislations, but also the technology and the intellectual property that we have developed in the last 2-3 years. So the addressable market in general is going so high when we look at our emissions product. So we see a very marginal impact when it comes to the electrification side. And second, we are largely going to be playing in the CV and off-highway segment. So when we are looking at our projections going into 2024 and 25, more than 80% of our revenues will be coming from the CV segment plus off-highway segment, which includes LCV, heavy commercial vehicles, tractors, construction equipment, as well as the component business. But yes, it is definitely an attractive opportunity, and we feel that 2-wheeler and 3-wheeler would be a great place to play when it comes to electrification, and that's why we are targeting this as a new market segment, and that is why we have begun with this joint venture on the 2-wheeler and 3-wheeler side.
Excellent. Thank you very much. Very detailed. On the EV side, just few questions in terms of, I think there's a lot of people who are going to enter that. We have Exide, Amar Raja, Toshiba, Lucas, TVS, multiple people who signed up for the PLI scheme. Would we have any differentiators in terms of battery chemistry as to why would the OEMs look at as our kinetic energy based lithium-ion battery versus others? That's one question.
Yeah. So, we first of all importantly have an anchor customer, and in this industry, an anchor customer is very important as they will be going through various changes. And while you mentioned some of the companies, these are all going into power cell manufacturing, and we are going into the assembly business, which is agnostic of chemistry and evolution in technology. So our mindset is that we want to be more on an asset light level when it comes to the battery assembly business and utilize this opportunity with our anchor customer to develop various other products which our R&D system is preparing as we speak.
Wonderful. Wonderful. So other than EV, if it can be disclosed, are there other products that you would be developing or you intend to participate in?
Yeah, so definitely,
other than the EV batteries, I'm sorry, other than the EV batteries.
Yeah, so I think the strategy, step one is to get this going, but step two is to be looking at subcomponents and looking at other places where we can play and cross-sell in the EV business as well as other components. But at this juncture, we are taking it one step at a time, and this step one is very important to get through, and then we'll of course discuss in detail about the next phases.
Thank you. Thank you very much. All the best for Q4.
Thank you. Thank you so much.
Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Chirag Shah from Edelweiss. Please go ahead.
Hello. Yeah, thank you for the opportunity. So my question is, first, when I look at suspension products presentation that you have shared details, the market share is only 10%. So why it is so, and what is your thought process over there, and what it will require for you to achieve a higher market share?
So yeah, so thank you so much for the question. Regarding the suspension business, given that there was a big legislation tailwind that we have in our emissions business, our full focus, from 2017 to 2020 was to make benefit of this BS6 which was implemented. And hence the other business verticals, there was not that much focus. But now that we have a very stable emissions vertical, we are looking at our other products and building strategies on revamping each one of them. And as these strategies get formalized, we will keep updating. So definitely there is potential, and there is definite potential to revamp every other business that we have.
Can you elaborate what exactly is that business? What are your key customers? Who are your key customers? Key segments, etc. It would be helpful for that.
Yeah. So as of now, it is PASCAR only, and we don't name customers as a policy, but we have 2 to 3 customers in that segment.
And then the customer would be same between this and exhaust system? There would be a commonality of customers?
Yeah, maybe there's one customer which we have in this segment, which we don't have in exhaust system.
Okay. But how do you see your market share? What will it require from your side in terms of investments, in terms of management bandwidth, to scale up the market share to 30-35% where you are today in the exhaust system?
You're talking about exhaust systems?
No, the suspension market share, if you want to bring it at par with your exhaust system, what it will require from your side? What kind of efforts, whether it is customer development, investment that is required, if you can elaborate what all things we will have to do to scale up the market share?
Sure. Right now we are working on the strategy, so I won't comment, any specifics, but just that there is potential in the suspension segment as well as other products. But just because our strategy is underway, so for the purpose of this call, I won't comment further on that.
Yeah, and a related question, probably if you can elaborate now or maybe later on. See, when we look at a lot of ancillaries, your peer set in terms of the size and structure, a lot of them are focusing on products which are a combination of mechanical electronics, or let me use the word mechatronics in that sense. So is that kind of product on your radar when you look at your detailed strategy for over a longer period of time? And also, if you can elaborate what kind of products you are evaluating internally, or what line streams you are evaluating internally to expand your product basket.
Sure. So one, we definitely recognize that there is very good potential that our company has to increase its content per vehicle, and hence it would be lucrative to get into newer products. But as we are exploring multiple opportunities at this time, as things develop, we will keep updating regarding that.
Yeah. And so if I can squeeze 2 more questions. So one is a clarification. So when you said this OBD2 norms will have a significant impact on your passenger car content, the structure would be similar, which is now like half of would be bought out and half would be manufactured, or the mix will change post that? Because today, if you look at our revenue, everything is not manufactured. Half of them are bought out or traded or based on how the client is indicating to you as far as sourcing is concerned.
Yeah, so we expect that all new norms will have a similar trend. Now, the question about bought out is, I think, more the catalyst. And in the case of the catalyst, even in our current revenues, some customers ask us to buy it, some customers give it to us free of cost, and that is likely to continue as we go future. It's not, every customer has a different choice there, but there's no change in structure as such that the norms will bring about.
Yeah, this is helpful, sir. So one last question on export side. Any thoughts on whether export is an opportunity for us in the current product portfolio, and how are we looking at it?
Yeah, so exports is definitely a big part of our growth strategy. And where we are focusing on exports is the small engine customers and the off-highway segment, plus the subcomponent segment. Both of these are very large global markets and do not have any formal market leader as of now. We have developed the technology to cater to all these markets and also showcased this technology in the Indian market. So this is an exciting opportunity for us. The business development activity has already started with multiple customers, and as and when we get some good success in our endeavors, we will keep updating on the same.
Oh, this is actually, it's more in the development stage as of now, so it will take some time for you to get the approvals and then start shipping out the initial trial products, etc., etc.
Yeah, so here the business development cycle is a little bit faster than what we see in the traditional OEM segment, because here there is a blend of aftermarket customers, tier ones, as well as off-highway customers, which usually have a shorter business development cycle than what we see in the big OEMs of the CV and PV industry. And our focus for exports is going to be on these off-highway and tier one companies and aftermarket companies rather than just OEMs.
Thank you very much, and all the best.
Thank you so much. Thank you.
Thank you. A reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is from the line of Apurva Shah from Phillip Capital India Private Limited. Please go ahead.
Yes, sir. Thanks for the opportunity. So with respect to JV, so I do understand currently still we have not yet achieved the break-even level. But is it possible to share maybe quarterly or 9 months revenue for the JV?
Sure. So I think the exact numbers we can share offline, and definitely it would be possible to share the revenue numbers.
Okay. And sir, on a sustainable basis, so if you just look at maybe 24-25, so would this JV would resemble our operating metrics of the standalone business, where we are doing almost 5 to 6x of asset turn and maybe a negligible working capital with similar sort of return ratios, etc., and maybe 10 plus operating margin?
Yeah, so we are very hopeful for that, as the business dynamics are very similar in that market versus the markets we are playing in the standalone business.
Okay. And so just one more thing on the JV part. So as I don't want to go into name of the customer, but can we share the wallet share for each customer? So that would help us to understand how we are penetrating in just 2 years of operations.
Sure. As of now, we are not sharing the wallet share, and there we also have, the other partner. So we will have look at what best we can do in terms of transparency and try to share whatever best indicators are possible.
Okay. And so one thing on the R&D part, so I think historically we have been very consistent spending into R&D and developing new products, and I think that has helped us in developing a future-ready portfolio. But currently, sitting in the current situation, I think we are ready with TREM 4 as well and CEV 4 as well. So do we need to do that R&D expenses in the near future? And if yes, then what would be the focus area which help us to differentiate ourselves and to compete with the larger MNCs?
Sure. So one that we have already got the technology, not just for CEV4 and TREM 4, but also for TREM 5 and CV5. And this same emission legislation is now equivalent to what is there in the US market, the European market, and even Japan and Korea. So in terms of technology, we are, well attuned with our multinational competitors now, and that is very visible in the Indian market also, where we have a good market share. In terms of R&D as a company, we will, of course, continue our focus on innovation and utilize our R&D resources for deployment of this intellectual property which we've gained in the last 10 years, and also look at other products which will help us increase our content per vehicle and take us towards our powertrain agnostic journey.
So that would be majorly focused on the exhaust system or the current product profile only, right? Not any new products, etc.?
No, we are right now working on adjacency products and some other products in our R&D center, non-related to exhaust systems also.
Perfect. And so just last one more question from my end. So in CEV segment, so I think the legislation came in April 21. So obviously that came with some sort of a relaxation. So by sitting in December or January 22, so what is the current status in the CEV segment? Are we seeing any inquiry from the customers? And if yes, how many customers has floated that inquiry to us?
You're talking about the CEV?
CEV, yes, construction equipment vehicle.
Okay, got it, right. Yeah, so regarding CEV4 and TREM 4, TREM 5, all these segments, we are in talks with majority of the customers. Sorry, I couldn't hear that.
No, sir, go ahead, please.
Yeah. So we are in talks with majority of the customers. Without giving a number, we are for construction equipment, off-highway tractors, we are in touch with lots of customers.
So again, there we will be working with top 3-4 customers, right? So
yeah, we are as of now we can almost say working with everyone. We are in dialogue with almost everyone.
Okay, great, understood. Thank you very much and all the best.
Thank you so much. Thank you.
Thank you. We'll move on to the next question. That is on the line of Mr. Vishal Srivastava from Swan Investments. Please go ahead.
Thank you for taking my question again, sir. There are a couple of questions from my side. Sir, regarding the Sparker JV, you said the current capacity utilization level is close to around 40 to 50 odd %. So what do you expect at what utilization levels would you be able to achieve the break-even?
So yeah, I think more than capacity utilization, we expect at 200 crores of value-added sales, we will be break-even. And that, more than capacity utilization, it is more a figure that we have the calculation based on.
Okay, sir. So my second question is regarding Kinetic Green business. So you said that it will commence operation from H2 of FY23. So any guidance, sir, in that regard, how you see the business to grow in by FY24, 25 and going forward? What is your plan taking that business in 4-5 years ahead and in terms of margin profile? Some guidance in that regard.
Sure. Right now, we are just fully focused on the phase 1. And on the completion of phase 1, we are parallelly talking about phase 2 and 3. But once we have a firm strategy on that, we will then disclose, as right now the full focus is on phase 1, which is to get it going.
Okay, sir. Okay. That's all from my side. Thank you, sir.
Thank you.
Thank you. The next question is from the line of Sonal Kohli from Bowhead. Please go ahead.
Thank you for this opportunity again. I have a couple of questions, so I'll ask one by one. So firstly, when I look at the standalone business, what portion of your EBITDA or broader level profits, comes from car exhaust systems? And if I look at all other business, whether it's your suspension, other products, exports, or LCV, exhaust systems, what portion of profits comes from others? So for the sake of clarity, I'll repeat the question. What portion of your profit broadly at EBITDA level comes from standalone car exhaust systems, and what comes from all other businesses, whether suspension, other products, exports, or LCV exhaust systems?
Sure. So as of now, we are not able to disclose vertical-wise profitability or segment-wise profitability, but we could work on that. But in general, we can give a bifurcation on sales, and maybe Srini-san, you can give an indication on sales bifurcation.
Yes. So in terms of the revenue, if you see, our 90% of revenue comes from the exhaust business, and about 6% is suspension. And the rest are very few, like the procurement side or the canopy, just about 2%, etc.
So I wasn't asking a bifurcation of exhaust versus non-exhaust because, that would be fairly simple. 90% of your revenue is coming from it. I was trying to understand passenger car exhaust systems versus all others because, some will have some element of threat over the next 5 years. The others would have broadly zero threat over the next 5 years,
So in terms of passenger vehicle versus LCV is what we do. I mean, that's about almost equal. About 45% each.
Oh, I see. The second query I had was, you said your CV capacity utilization is about 40-45%. What kind of capex would it take to increase that capacity, let's say by another 100%? Do we have land and ability to do that capex? And how much time would it take to increase the capex? I'm asking you in the context of if the CV cycle recovers, then you gain market share. What would be a situation, 2-3 years hence?
Sure. So, just like our current business, even that business has incremental capex only. So it totally depends on project to project, but it would be incremental in nature. And in this product, it's easy to augment capacity in general. And so, we could fairly increase capacity with less capex, incremental capex.
And is my understanding at broad level correct that the value add portion, whether in passenger cars or CVs, would be similar, MHCVs?
No. So in MHCVs, it's much higher. It would be much higher than passenger vehicles, just probably you can say 2.5, 3x also in CVs, in heavy.
I was asking in terms of percentage, not per vehicle.
In terms of percentage, as in?
So let's say if the total MHCV revenue is 100, and if the total passenger revenues is 100, let's say in case of passenger, if it's 50, would MHCV be 60 or would it be 40 or broadly 50,
Okay, I don't have this number offhand, but we will get back to you regarding
that. Great. What is the EV capex for phase 1?
It's very marginal. It is, maybe Srini-san, you have the exact number?
Yeah, it's close to about 10 crores, 10 to 15 crores.
Okay. And, in terms of, you mentioned about the land which is available for sale, at a broad level, is it possible to share the market value of it? And, would you be selling it over the next 2-3 years?
Yeah. So the market value, just because we're not sharing any numbers, but it is in 3 figures, and it's 2 parcels of land that we have. And our thought is that at the right opportunity and right price to definitely utilize and sell off the land.
Great. Thank you so much.
Thank you. Thank you so much.
Thank you. The next question is from the line of Karthikeyan from CH Advisors. Please go ahead.
Again, I'm going back to the Eberspacher, joint venture. More than the joint venture, has there been any discussion with Eberspacher itself in terms of working with them on, some business opportunity, given the fact that Europe seems to be accelerating its move towards, say, electric or whatever. So are there discussions you are having? Are they seeing any pressures from their side which you can solve for them? Anything on this would be interesting. I suppose you had lots of time in the last 2 years too.
Sure. So there's always opportunities, in terms of synergizing, and there are definitely conversations always going on in that regards. But as soon as something forms up, then only I would like to comment in it. But yeah, definitely this trend in Europe would be a benefit to us in many ways beyond what you just mentioned. But as things form up, then only I'll be able to comment on it.
Great. Again, best wishes. Thank you.
Thank you.
Thank you. Ladies and gentlemen, that was the last question. I now hand the conference over to the management for the closing comments.
Thank you. So we anticipate that infrastructure work, the development of clearer policies and a vision for long-term and sustainable growth will provide us with numerous opportunities in the coming years. All of these opportunities are technologically and strategically ready for us to capitalize on. I would like to take this opportunity to express my gratitude to everyone who took part in this call. I hope we were able to address all of your concerns. Further, if you require any additional information, please contact me or Strategic Growth Advisors, our investor relations team. Thank you so much and wish you a lovely evening.
Thank you.
Thank you all. Thank you.
Ladies and gentlemen, on behalf of Phillip Capital India Private Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.